that's a good question, Gus. And there are actually a couple, and one is geographically specific, and that's a USDA loan. It's very similar to a VA. It's an insured loan, or it's a guaranteed loan, and not an insured loan. So there is no money down. The restrictions are income. You have to have a moderate amount of income, and also it's geographical. So you may not think of areas, but things like Lincoln is a very good example. Everything in Lincoln you can get on a USDA loan with no money down. Their interest rates right now are around 3.875. And like I said, it's basically for people that are to low to moderate income. If you make over $100,000, you couldn't qualify. But for people who want to get into home, that is a great program. And the second one that comes to mind is one that we have that basically is only a 0.5% down. It's an FHA loan, so the downside to it is there's mortgage insurance, but the upside is for 0.5% or, probably somebody's rent payment, they could get into a home, and it's a really good program. And the way that's structured is you get a FHA loan for about 96% of whatever the appraised value is.
Oh, wow.
And it, once again, is down there low, like around 3.875, but depending on the company, because it's a risk, it can go up to maybe 5%. It really depends upon the FICO score and stuff like that. And then the way it works is the other 3% the company carries as a second. So it's a 15-year loan. They charge you 8.25%. And for most people, that works out to be around $60 to $90 extra a month on top of their first payment and their mortgage insurance. But both of those programs are just dynamite. They're for people who want to get in that don't have a lot of money down.
How about people that had a short sale before?
Yeah, there's many ways to skin that. Basically, it's 2 years for people that have had a short sale if they want to go with a government loan, like the USDA, VA, FHA, and things like that. Now, they also have one that's a very high interest rate where one day out of bankruptcy, foreclosure, short sale, you can get a loan. Now, the problem with that is they require at least 20% down, so an 80 to LTV, which means loan to value. So they come up with 20% down. If they've been out of just one day, you can get them a loan.
Oh, wow, that's great.
But the 2 year is really, it's not a bad deal that you can do that on, lower interest rates. So if they could wait 2 years, if they have a house out there that they just want to get into that, it's undervalued or something like that, and the money can be gifted too, the 20%. So it isn't like money they have to buy.
I also hear about these interest rates changing because the government is no longer going to be selling bonds again, I think in October or November. Do you know anything about that?
Yeah, they're really scaling back, and there's just been a lot of nervousness about that. But the interest rates are driven by a multitude of things, and one of those is probably the biggest, which you're just talking about, which is the bond market and the money that the government pays in to pay those down. They're talking about pulling back. But everything else is going well. The housing market's doing well. The stock market's doing well. We're not in any wars, although we have all kinds of promises or factions going out there trying to create. We currently aren't in any war, and things are going pretty smooth. So those have overcome the fear of the government pulling out. And actually, interest rates have actually declined over the last month by about 1/4 point. So a lot of that is a nervous Nelly, and if you can get in, get a loan, get it locked, I would recommend that. But I think the fear of, if I don't do it today, it's unrealistic.
Okay, just a speculation. All righty, yeah. Tom, well, that was great information. I am going to go ahead and pass this on over to my clients and see what they say. And thank you very much, again, for always being available for me.
Well, you're welcome, Gus, and remember that angels take themselves lightly, and they can fly.
All right, sounds good, Tom. Thank you very much.
Okay.
All right, bye-bye.